Alert! China has intensified its ban on virtual currencies, shaking the foundations of the global crypto market. Is this the end of crypto in China, or the beginning of a new international chapter? China's stance. On November 28, 2025, the People's Bank of China convened a high-level meeting in Beijing. Governor Pan Gongsheng declared, "Virtual currencies do not have the same legal status as fiat and should not and cannot be circulated as currency in the market." This statement reinforced China's push for the digital yuan as the only acceptable currency. Stablecoins and risks. Stablecoins came under particular scrutiny. Authorities flagged them for inadequate controls against money laundering, fraud, and illegal activities. China's zero-tolerance policy makes clear only state-backed currencies are allowed. Domestic impact. The crackdown has effectively eliminated domestic crypto trading. Chinese investors now rely on offshore markets, creating a sharp divide between internal policy and external demand. Global ripple effects. Offshore markets absorbed China's previous trading volume, influencing global price stability. Analysts warned this could fragment international markets, with jurisdictions potentially adopting China's strict model. The ban doesn't just affect China, it reshapes the global crypto landscape. Bitcoin market snapshot. Bitcoin currently trades at $91,352.91, with a market cap of $1.82 trillion and daily volume of $37.75 billion, a 30.75% drop. Despite a 5.99% weekly increase, the long-term trend remains downward. Charts from CoinMarketCap highlight the volatility and uncertainty surrounding Bitcoin's future. Future speculations. Will China's stance push innovation offshore, or will it inspire other nations to tighten regulations? The digital yuan could become a model for state-controlled digital economies. Meanwhile, crypto traders worldwide brace for ripple effects. Conclusion and disclaimer. China's crypto curtain is reshaping the future of digital finance. The question remains, will the world follow? Warning. This video is for market commentary only and does not constitute investment advice. Always do your own research before investing.